Good afternoon, everyone, and welcome to Stock Market Today. It's Coram and Ken Shreve here with a look at the action in today's session. And we finished well off lows despite that hot inflation data, Ken.
Yeah, a little bit of selling into the close, but the Nasdaq did, like you said, close well off lows. It was down 2% intraday and closed basically flat, maybe just a little bit lower. But take a look at three stocks today. A new name in the healthcare sector, Agilon Health, ticker AGL there. Also, our stock of the day today, Lee Auto, ticker LI, and Celsius has pulled back into a buy range here and looks pretty good.
All right, we'll take a look at all of that. But first, let's check in on the major indexes. So the Nasdaq today down less than 0.2% by session's close. Same for the Russell 2000. A little bit harder hit were the S&P 500 and Dow. The S&P down about 0.5%. The Dow down 0.7%. But looking at the Nasdaq composite here, well off of lows. We also were drawing a lower channel line or a trend line here, touching some recent lows, and it looks like we did get some support at that level today. But still, even though we shook off this hot inflation data, conditions aren't really great right now. But they could be a lot worse, I suppose.
Yeah, it's still a very difficult environment, and the price action in the major stock indexes is indicative of that. It was nice to see the Nasdaq significantly pair a 2% intraday loss, like I said, and sort of the S&P 500 and Dow. So, the M is the most important letter in the CANSLIM acronym, and that's market. You need a good market to get the good setups and good profit opportunities. So, it's a difficult environment right now, making consistent money in stocks. And if you do have exposure, it should be very light.
And we'll just take a quick look at the weekly chart here as well for the Nasdaq. This week down a couple of percentage points here and resistance at that 10-week line. We are starting to make some higher lows though, but Ken, we've been there before and it didn't turn out too well. But could this be the beginning of a turning tide here?
Well, it could be. I mean, it's easy to feel very negative right now when you see the weak action in a lot of stocks, and probably the portfolio not making a lot of headway in this back and forth market. But again, we got a super hot reading on consumer inflation. We're going to get wholesale prices later this week, and the market was at least hoping for an inline number. It did not want to see it come in above expectations like it did. So stock market is still grappling with the threat of recession and how this is going to impact corporate earnings, and just a lot of question marks out there. And it's not surprising to see the market acting the way it is.
Yeah, I was also about to mention how earnings season is about to get underway. So that a lot of guidance from some of these big companies that could have an impact on what we see unfold in the market, in addition to the next rate hikes. It looks like there are increasing odds for a 100 basis point rate hike at the next meeting. So the market's going to have to grapple with that as well.
Absolutely, yeah. So the odds have increased for a full percentage point hike at the meeting at the end of July. It may or may not happen. We know 75 basis points is baked in, and it's also baked into the August meeting as well. So it looks like it's going to be two aggressive rate hikes in a row by the Fed, and then after that it gets a little more cloudy. But the CPI data today certainly reinforced to the Fed that they need to bring the hammer, and they'll do it in late July, and they'll most likely do it again in August as well.
Okay, moving on. Just a quick look at the S&P 500 here. Closing off lows, but still below that 21-day line. Same for the Dow. And the IWM, which tracks the Russell 2000, also showing similar action here. And so speaking of rate hikes, let's take a look at the 10-year Treasury yield 0 TNX. So reversing lower today. right around that 3% mark. And now we're hearing more about this yield curve inversion.
It's pretty amazing to see the 10-year yield is now inverted or yielding more than the 7-year, the 5-year, the 3-year, the 2-year, the 1-year. It's just inversion everywhere. So inverted yield curves where you're basically getting paid more to hold a longer dated note like the 10-year note. This has been seen ahead of a lot of recessions in the past. So we know the economy is headed for a soft patch. The question is how soft. We clock negative GDP growth in the first quarter. It looks like it could be negative again in the second quarter. So it is interesting to see that 10-year yield reverse like it did today, because when this inflation data came out, the 10-year yield was basically flat in pre-market trading, and then it jumped over 3% on this inflation data as the market said the Fed's going to have to be more aggressive now. And but the 10-year yield did not hold the gain at all. It went over 3% and it closed near its session low. So kind of a curious reaction by the 10-year yield today. You would have thought it would have been able to close near highs at least above 3%, but definitely, as you can see on the chart here, tried to get above that 50-day and reversed lower.
And since we've been focusing a lot on medical sector names, let's highlight sort of a new one here you mentioned, Ken, AGL, Agilon Health. And it dipped a little bit today, but it's been closing pretty tightly the last couple of sessions after a number of blue up days.
Yeah, and some blue up days in heavy volume. That's helping its accumulation distribution rating of A minus, which is strong. Points toward at least some institutional buying, or the accumulation distribution rating gets rewarded when a stock is rising in heavy volume. What I like here, and we've been talking about these kind of orderly low volume pullbacks, I like the way Agilon is pulling back as well. You can see 3 straight orderly declines. Volume is getting lighter and lighter, and this again on the heels of several above average volume gains. You can see the stock really has closed off lows all 3 days it declined. So it's showing good technical action. It's got it's turning profitable next year. It's got great revenue growth in recent quarters, and I particularly like the fund sponsorship here. This is what really caught my eye. When you look over the past 4 quarters, it's been kind of flat and stagnant, but when you look at the fund ownership, it's got quite a few. Agilon is this is the one that just flat fund ownership, but the sales growth is what really keyed me in here, and good solid company. Basically, Agilon, they provide systems for primary care physicians that are giving care to the elderly via Medicaid. So it's got the new in-can slim, and looking pretty good here.
Well, we are seeing that fund ownership increasing, and I'm sure we can drill down when we have more time on IBD Live to take a look at that fund ownership, because even if it doesn't have any funds from the IBD Mutual Fund Index, all is not lost. If you look at all the other funds in there and sort them by ranking, if it has A+ or A-rated funds, that's definitely a good sign, alongside an increasing number of funds in a quarterly basis.
Absolutely, and just looking at a lot of healthcare stocks lately that are seeing good fund ownership, and sometimes I get a little, all the tickers that we're looking at.
Yeah, you're so on top of the whole medical sector.
So this one doesn't have any. It doesn't have any of the O'Neill funds in it, but like you said, it's got 338 funds in the stock at the end of the second quarter, and technicals are kind of jumping out here at me.
Yeah. And so speaking of, it looks like it's coming up to a key resistance level here. So if this, handle acts as a coil that's waiting to spring open, I mean, seeing some heavy volume and clearing that resistance would definitely seem compelling here.
Yeah, that's why it's high on my watch list. I just like the way the stock has pulled back, like I said, over the past 3 days. I'm just going to continue to watch the pullback and see how it trades. If it continues to show strength and support, that raises the likelihood of perhaps more gains ahead. So good one to watch.
And next on our list, let's talk about IBD's stock of the day today, and that is Li Auto. What an impressive move this stock has made since its last quarterly report in mid-May. Just a huge move with the price gains being accompanied by heavy volume and not too many heavy days of selling. But even though it was clearing resistance levels going back to the weekly chart here, we were saying, look at how many weeks up in a row. It was getting so extended above the 50-day line a couple weeks ago, finishing, can guess what, 53% above the 10-week line. So we said this stock needs to pause, needs to settle down, pull back, and we've gotten that. Not a full-on base, but we did get a pullback to the 21-day line and a bounce off of that level. Volume was not above average today, but it looks like it was higher than the prior couple of sessions.
Yeah, and that's what I looked at, and so this is the pullback that we've been waiting for, and again, it was the stock of the day, so you can read all about Li Auto right on the homepage of investors.com. The first breakout here was when the stock basically broke out over the 30 level, or maybe 31, 30, 32, and then it ran up to 41, and it was just too extended to buy after all those up days in a row. But you do have a nice pullback here to the 21-day moving average. So I can understand why people might have nibbled today for a trade. Nibbling at the 21-day line can be a profitable endeavor. You just want to keep a stop on this, maybe 4 or 5% below your purchase price, maybe below today's low, but good action at the 21-day today, and I think it looks good.
All right, and last but not least, let's talk about Celsius. Didn't quite pull back to its 21-day line. It pulled back to its 10-day, though, and bounced today up almost 3%. And even though it had a decline of about 3.6% yesterday, with volume picking up from the prior couple of sessions, giving back a little bit of that almost 14% gain a couple of sessions prior, I think it was interesting where it closed, finding support right above this 72 area, which is a previous resistance level for the stock.
Yeah, and yesterday's pullback, it really was just a pullback not only to that prior buy area, but to the short-term 10-day moving average. So, anybody interested in buying Celsius, I think it's in buy range here, and maybe a small 2.5%, 5% position, something like that makes sense. We're still in a risky environment, but seeing some pullbacks that are looking interesting. Celsius is an interesting company because they were in the news last month when PepsiCo actually ended a distribution agreement with a company called Bang, which is another energy drink maker. But they ended the distribution agreement more than a year ahead of schedule. It just wasn't working out. So that prompted an analyst to come out and say that Celsius could be an acquisition target, maybe for a company like PepsiCo, now that they're not working with Bang anymore, maybe a distribution agreement, maybe a deal to buy the company. So that rumor has been out there. So there is that news headline. But technically, the stock is looking good amid, as you can see, explosive revenue growth and good annual estimates as well.
So if one were to initiate a small position here, where would be that ultimate line in the sand? It's about 8% above the 21-day. So would you be going with a recent low or a little bit lower to that 21-day? What would
Yeah,
be
probably.
your
I mean, at this point,
preference?
probably to the 21 day. And again, whenever you buy a stock, you always want to have an exit strategy. You never want to let a small loss get too big. So in a situation like this, if it's an 8% pullback is going to bring it down to the 21-day moving average, I think I'd probably just wait and see what that test looks like. It might be a little more of a loss than I'm willing to take in a stock, but because it's a high quality name, I might just wait for a test of support. If the market, continues to pull back and it brings stocks down with it, it probably would pay to see what a test of the 21-day looks like for Celsius.
All right. Thank you so much for that, Ken. And thanks everyone for watching. Coming up tomorrow on the Investing with IBD podcast, Ken Shreve is the special guest. And Ken, you're going to be talking with the crew about bottoming bases and what to look for and a couple of ones that have been profitable for you in this recent market cycle.
Yes, indeed. And I just remembered one healthcare stock that we're going to probably talk about towards the end of the show is a little known name that has got a ton of IBD fund sponsorship. I mixed them up. I'm doing too many
Yeah, you're doing too many
videos
videos
today.
Yeah.
So tune into the podcast and you'll see that healthcare stock that has got really, really outstanding fund ownership and in a good technical setup to boot.
A nice tease there for that podcast drop coming tomorrow, investors.com/podcast. So keep an eye out for that. Ken and I also will be on Barron's Live on Friday and really looking forward to that discussion where we will dig even deeper into the biotech industry. So looking forward to doing that with you, Ken, because we only get 10, 15, maybe 20 minutes here, but we're going to have 45 minutes to really dig in and dedicate a show to that topic. And I know it's one you're really excited about.
Yeah, I mean, large cap, mid cap, small cap. It'll be a nice group of stocks. Some dividend payers, others not. But one thing is for sure, you'll get a nice discussion of stocks that are have good fundamentals and are showing good relative strength in the market.
Right. Yeah. It's kind of medical mania right now. It seems there's a lot of focus on the medical sector with that rotation out of oil and gas. So there's a lot to unpack there. So we can make sure our audience is focused on the leaders in that group. So join us on Friday, barrons.com/live for the details. So we will see you there. We'll see you right back here tomorrow after the close.